Yes, so we are all investors, right? Whether you're day trading, swing trader, institutional investor, or retail investor, yesterday, an investor of some sort. So the subject of today's video, guys, is types of cryptocurrency investors and their likelihood of success. So this is a must watch. Whether you are a project owner or creator, you are a trader, an institutional investor, or retail investor, this video is actually for you. Because here we are talking of probably 8 to 10 different types of investor within the crypto space. That said, guys, please know that this information contained in this video is not financial advice. If you do require financial advice, know what to do. Please avoid someone who's trying to give you financial advice. The information contained within this video is just for entertainment as well as educational purposes, and it's not financial advice. You need to take note of that. And for those from the UK, please do not watch this video or anything crypto related. Why? Because the UK authorities are trying to protect you from losing your funds just in case. Because in crypto, you must, I must repeat this, you must invest what you are prepared to lose. If you're not prepared to lose your funds, do not take part within this space. There are inherent risks everywhere. That's it, guys. If you're from the rest of the world, guys, welcome to SafeHouse.tv. Thank you very much for stopping by. If you are not subscribed, please consider subscribing to our channel. The objective remains grow, of course. We all want to grow. We still have those ambitions to grow. That said, let's come back to the types of crypto investors and their likelihood of success. And this subject is quite important, especially in a bull market like we are. What kind of investor are you? And what are your chances for success? Not financial advice. This is just for educational as well as entertainment purposes. So let's start with the typical retail investor, you and I mostly. The profile of a typical retail investor is an individual investor buying and selling for personal account. As a retail investor like myself, I'm motivated by profits from price fluctuations, hedging against inflation, and diversifying my portfolio. So if I'm in shares or mining stocks or whatever, I will add cryptocurrency as a retail investor. I'm talking of me, diversify my portfolio so that if something goes wrong elsewhere, I'm still covered. Most likely, it might go wrong in crypto and then you're covered elsewhere. But if things go well in crypto, sometimes it could be bonkers returns. Not financial advice, of course. My typical behavior as a retail investor is that I'm short term. If I'm going to trade, I'm short term. I'm not looking at holding things long term. I frequently buy and sell. Not that I do that because you guys have seen my portfolio, the way I structure my portfolios. There's one portfolio that I told you is liquidity generation. Maybe within that's where I might do certain things, but most of my portfolios are kind of reasonable, steady. I don't chop and change so often. I also have the inclination to hold long term. For example, certain assets, for example, Bitcoin, you may decide to hold long term, but I told you how. If I do so, how I do it. I do it different to other people who scream hodl all the time. I can hold assets for potential significant future value. I mean, if you think about that, those who went into Bitcoin in 2010 or 2011, they can see the benefits now, but not many people were that strong. And as a retail investor as well, I'm speculative. I'm driven by trends, social media, and news. This is why people are driven crazy by things like Twitter, now called X, of course, or YouTube, or even TikTok. They go there, they see things, they listen to moon boys, they become speculative because they're driven by trends. That also characterizes meme coins. It's about trends, right? Social trends. Now, that's retail investor, which I'm guessing you and I, we are both retail investors. This is what typifies us as retail investors. Moving on to the characterization of an institutional investor. The profile, it's like an organization. Think of hedge funds, investment firms, corporate treasuries. They are all part of institutional investors. This group of investors is motivated by diversification, hedging against traditional market risks, potential high returns, so as to make more returns for themselves or their clients. What about their behavior? Well, long-term investment mostly, significant long-term investment actually. And it also characterized by risk management, use of sophisticated strategies like diversification and hedging. Now, that is your typical institutional investor. But within that as well, you may have other institutional investors. Be fair, so-called retail investors, they can also become a third type or category of crypto investor. That is a day trader, even though they're only investing for a day or hours or even a few weeks. Day traders. The profile of a day trader mostly is individuals or professionals trading within the same day. They are motivated by profits from short-term price movements, leveraging technical analysis. Squiggly lines are called them. Their behavior is typified by high-frequency trading, numerous transactions within a single day. Technical analysis, which gives them a platform or which allows them to rely on charts, patterns, and market indicators. So that is a typical day trader. I know this is just the short version of what a day trader is or does, but that is the third type of investor we are looking at within this video. The fourth type of crypto investor is what's called a swing trader, and their profile is typified as an investor holding assets for a few days to a few weeks. So maybe at some point we all go through that, don't we? You become a day trader, classified as a retail investor, but you can also do day trading and swing trader. Unless you're well, then you can create your own fund. Most retail investors cannot become institutional investors. So as a swing trader, you're motivated by profit from market swings or short-term trends. Again, very close to day trading. And their behavior is characterized by trend following, identifying and following market trends, technical and fundamental analysis. They combine both for decision making, but not so many do it well, because if they did, they will all be rich, and it can't happen, can it? Because trading or investing is like poker. You're playing against each other, especially in crypto. You're playing against the next player. Whoever blinks first loses, or the other way around. So that is your swing trader. The next type of investor is miners. For those cryptocurrencies that do mining, I think even the ones that do staking, proof of stake, they call it mining, but it's not really. It's just validating transactions. They're not really mining anything compared to proof of work. So a miner's profile is characterized as an individual or companies validating transactions on the blockchain. They are motivated by the earnings they get from cryptocurrency rewards and transaction fees. Their behavior is typified by the investment they make into infrastructure. It could be fast computers, massive computers, complicated computers, and mining rigs, as they want to call them. Because this is why when we talk about Bitcoin, people talk of miners needing to reach a certain amount with regards to the Bitcoin price for them to become profitable. So, for example, they might say the threshold currently is 55K due to the difficulty of Bitcoin mining, because the computers have got to carry out a certain number of computations to get rewarded, and only one can get rewarded at any point in time. So that is a very competitive area to benefit from or to invest and get decent rewards. So that's miners for you. And they are also long-term holders. They often hold mined cryptocurrencies for future value. Of course, if they get rewards today and the price is low, they might hold off for when the price is high, because they will want to pay bills when computing difficulty increases or want to get more returns for their investment. So that's on miners. The next type of investor is what we classify as whales. Now, a whale can start as a retail investor, and then if they are good at what they do, they can become a whale at some point. Or they are just rich, they come into crypto as a billionaire, and at some point they will live as a millionaire. They're not good at it, but they are still a whale nonetheless. So a whale's profile is characterized as an entity holding large amounts of cryptocurrency. Okay, there are different ways of doing that. They are motivated by the influence they hold around market trends, strategic long-term investments, and their behavior revolves around the market impact they cause. Because if you're a whale, you can change the direction of the market depending on the size of whale you are. They can trade significant amounts to influence prices. This is where this manipulation comes in, where a whale or a group of whale might collaborate and decide to take the price in a different direction to grab some liquidity. They can do that. I'm sure everyone will do it. If you're a whale, you'll do it. And their moves are always strategic. They're calculated, and their trades are large scale. These are the people who could probably, they don't do day trading because they don't need to. They're already rich, but they are prepared to wait, lie in wait, see where the market is going. They'll look at where people are getting crazy. Is it those who are shorting the market or those who are long in the market? Then they make their move in the opposite direction, of course, just to grab that liquidity. It's almost like they get a kick in seeing other people suffer, but that's a whale for you. And the next type of investor is what's called an early adopter. Their profile is characterized as an investor who entered the market early. They're motivated by belief in the technology and long-term vision. This is where the likes of your Da Vinci, who went into Bitcoin when it was around $1 or below that, and other big guns who went into Bitcoin a lot earlier. And their behavior typified by hodling. So they hold for the long term. They are not swayed by short-term market movements or medium-term market movements. They just hold on for the long term. But at some point, they do need to sell because they need to pay bills. And I'm sure they also sell at one point because when the Bitcoin price is going down in a bear market, I'm sure those people are not holding all their holdings, all their Bitcoin. They are selling some and then re-enter at a lower price so that they can increase the size of their bag. They also promote the benefits and potential of cryptocurrencies. Yeah, have you ever heard of Bitcoin maxis or Ethereum maxis or any max of some kind? This is them early adopters, the true believers. The next type of investor is ICO or IDO. This is the initial coin offerings or initial DEX offering. These type of investors are motivated by the early entrance into potentially lucrative projects, high risk and high reward. Here you'll find your whales that will be in there, and some smart retail investors will be in there. Institutional investor, most likely hedge fund. That's what they do. Invest early at giveaway prices. The project's token launches, they dump on the masses, which is the retail investor, you and I, and then we are their exit liquidity. But then if that project does well, we then become the new beneficiaries and we win big. That's just the way the world works. ICO and IDO investors, they are motivated by the early entrant into potentially lucrative project, like I said, but it's also high risk, which means they potentially can earn high rewards. But it's high risk. What if the project doesn't work out or the project founders run away? They go on a run, they dump the project, you get dragged. And their behavior is typified by the way they do vetting of the projects. They perform due diligence. Not all of them, but some do, because the FTX case does leave some question marks on these venture capitalists or VCs. How much due diligence do they actually do? They are also characterized by early selling or holding. Some do hold. They sell quickly for profit or hold for long-term gains, but most of them is the former. Those who hold for long-term gains is probably down to the vesting period, where the vesting period does not allow them to cash out all their rewards or their gains. Then another type of investor is a technologist and developer. Profile, it's an individual advancing blockchain technology. You're talking of your Vitalik, possibly your Charles Hoskinson, your Gavin Woods, your founder of Solana, and so forth. Those are the people who are technologists. They are motivated by the technology they create, the innovation, and the impact they are making in the world. I mean, one or two, Vitalik and Charles Hoskinson will come to mind. They want to change the world. Their behavior is typified or characterized by reinvestment. They reinvest the earnings into technology. I think Charles Hoskinson is a typical example where he makes his millions or billions, starts investing in real-world infrastructure like hospitals and clinics to change the world. All as a result of his successes within the blockchain or cryptocurrency space. They also engage the community. They are active in the blockchain communities they represent. Charles' YouTube channel for Cardano and so forth. The next group or type of investor is your airdrop and bounty hunter. Profile, these participants take part in promotional activities for free cryptocurrencies, or they test different things for rewards. They're motivated by the promise of free tokens or the potential of earning free tokens. We have all done that. During the past year or 12 months, we've all also gained something from those activities. Airdrop and bounty hunters are motivated, like I said, free tokens and or freebies. Their behavior is typified by their engagement in promotional activities, but this is how also other people get dragged. They get scammed because they are almost entirely ready to accept whatever someone is saying. Send me half an ETH and I'll send you these tokens. What kind of arrangement is that? Most people got banned during the past few months because of meme coin. And airdrop hunters and bounty hunters, they exit their positions quite quickly. We've seen that with those projects, especially Ethereum layer 2s, who've been attracting people to farm their airdrop tokens by locking their liquidity within their platform. And then as soon as the announcement is made of the token launch and the allocations confirmed, people just put their liquidity and go somewhere else. I think these are the worst kind of investor if they don't stay. They're like vouchers. So those are the different types of investor that we're covering in this video. So what are their success likelihood by the term or period that they are in their position? Short-term success, most likely day traders is short-term success, and the reason for that is they capitalize on short-term price movements and volatility, making numerous trades within a day to lock in quick profits. Here, some of them, they go in with massive positions, just going for 1%, because that 1% could probably be 10 grand or 50 grand or 100 grand, which is life-changing. If you can do that in a day, that's someone's salary. That's great, right? Then you also have those who go for medium-term success, most likely swing traders, the ones which say to hold their positions for days or weeks or even months, depending on what the narrative is. The reason is that they identify and follow market trends over weeks or months, making strategic trades that benefit from medium-term price swing. And finally, we have the long-term success, most likely institutional investors and early adopters. We've just been given an example of the likes of Da Vinci, those who went into, say, Ethereum or Solana and Bitcoin early. They benefit from long-term holding and adopted the technology early as well. And the reason for that is, for example, institutional investors employ long-term strategies and risk management techniques to secure sustained growth. Early adopters often have a deep belief in the technology and hold their investments through market cycles, potentially realizing significant gains as the market matures. So guys, those are the different types of investors and the likelihood of success depending on the type of investor you are. What I want to know from you is what type of investor are you according to what we just covered today, and how is that working for you? Or out of the ones we just highlighted in this video, does any of these group of investors interest you that you probably want to try it a little bit? Be careful though. Be careful, do your own research, because you may actually lose all your funds. Until the next video, guys, I'm your host, FD for Switchtrader TV, signing out for now. Bye.